This is Earnings Preview, a look at companies reporting during the week, along with companies which may have positive or negative earnings surprises. This earnings preview is for the week of December 1st through the 5th. Joining me once again, Charles Rotblatt, Senior Market Analyst at Zacks.com, the man who puts this all together for us each week. And boy, it's December already.
It is, and we got the holidays right around the corner, Christmas and Hanukkah coming up.
Yep.
Perhaps we should start singing some holiday carols.
No thanks, I have trouble coughing, let alone singing.
I don't think anybody wants to hear my voice, whether it be Silent Night or Dreidel, Dreidel, Dreidel. So.
Silent, that's the word. Yeah,
Exactly.
That they'd probably want to hear. But December kind of greeting us with a light earnings calendar. However, two main industry groups still remain in focus. Number one being the autos, number two, the retailers.
Right, and we will have some retailers reporting over the course of the week. They're really mostly late reporters coming out from the third quarter. We're really in between earnings season, so we will see a light calendar in terms of earnings really throughout the month of December. About mid-December, we'll see some early reporters come out, most notably some of the brokers left standing. But we really won't see fourth quarter earnings season really start in full for about another 6 weeks. So kind of a light period. But as you said, we will have some retail reports coming out. Going back to the automakers, though, that will really be one of the biggest stories of the week of December 1st through December 5th. The automakers are required to give Congress plans for how they'll right the ship by Tuesday, December 2nd. They're going to testify on Friday, December 5th. Note to the CEOs, consider driving down in a family sedan this time instead of flying the corporate jets.
The old-fashioned station wagon.
Exactly. Resurrect the Ford Fairmonts. But they're really going to be under the wire to actually explain how they'll use the taxpayer money to right the ships. And they deserve to be scrutinized because certainly there's a lot of other better uses for the money. And I think the key for the CEOs is to show, yes, these are the cuts we're going to make, including jobs, including their salaries and their perks. Also explain how they're going to build the next generation cars and really how they're going to get the companies out of this negative loop where they build the gas guzzlers when prices are low and then when oil prices shoot up, they're left with cars they can't sell. It happened in the 1970s. It happened again. And this $1.92, $1.90 gas we're seeing right now, it's not going to stay. So it should be interesting to see what they say. My guess is they will eventually get the bailout money. The question is when and how much. And they really are going to have to make the case to why they actually deserve the money and how they're actually going to start managing their companies correctly. And when you look at the automakers, the simple fact is, even look at the Ford family, they did a bad job with the Detroit Lions, so they really have a powerful argument they need to make.
Estimates still too optimistic? Revisions still need to be made? Cuts still need to be made, you think?
Oh, absolutely. But the thing is, when you look at the estimates, and the reason why I say absolutely is because, especially on the high end, there's analysts who are way too optimistic. But when you look at estimates and you start looking at the second half of 2009, it's a very big unknown. We're really looking at easier year-over-year comparisons. If we start seeing the economy recover, we could actually see the second half of the year be brighter. So it could be a period of 2009, really a year where we see estimates kind of coming down the early part of the year and being revised upwards in the latter half of the year. Unfortunately, we don't have a lot of visibility, so it's really anybody's guess as to what earnings will end up being in 2009. And quite honestly, there's not a forecast right now that I would trust. Therefore, investors should look at those numbers and really allow themselves a margin of error, meaning buy a stock where the PE is low enough to where if it gets revised even lower, you still left yourself enough room to actually say, yes, I'm buying the stock cheap enough, and it's really the potential reward far outweighs the possible risk.
December typically a bullish month in the stock market. However, you're telling me no Santa Claus rally in the cards for this year, in your opinion. And yet the market has not really priced in all of the potential negative news that it could get hit by.
No, it hasn't. And I think we will see a lot more negative news flow throughout the month. The economy's in a recession. We're going to continue to see negative economic numbers come out. The wild cards, though, I think, for the markets are really, what does Henry Paulson do that he hasn't already done? What does the Obama advisory economic team say? And what kind of proposals are get floated by Congress, possibly being prepared to be signed into law by January? And so I do think it's going to be volatile markets. But we are definitely in a recessionary environment. Earnings numbers are coming down. And even though we do have a rally heading into Thanksgiving, I have a hard time seeing it stick. I would love to be absolutely wrong on this, but I do think we could actually see another downward leg. Things right now are just too negative. But it's really going to be a case as to when do we start getting some of that forward-looking optimism truly kick in. I don't think we're at that point yet. But really, I think the wild cards and some of the main drivers for the markets are really for the things that are unscheduled, unplanned, that are hard to predict when they will occur. And that can be both positive and negatives for the market.
All right. Well, Charles outlines in his text version of the earnings preview a company that could surprise to the upside as well as a company that could surprise to the downside. And he also has the full calendar of companies that are expected to report in this most current week. And so I encourage you to go to Zacks.com, scroll down to the earnings preview headline, click on that link to view all of that material that he's taken the time to put together for your benefit. With Charles Roplat, I'm Terry Ruffalo.